Hello and welcome to the Red Chair podcast series. I'm Manuel, Collazo, Vice President of Strategic Marketing and Business Development for Association Headquarters. For more than 45 years, AH has provided association leaders, volunteers, and staff with the most relevant and compelling industry news and information. Hello and welcome to the Red Chair podcast series brought to you by Association Headquarters. I'm Manuel Collazo, Vice President of Strategic Marketing and Business Development for AH. This is our third season of the Red Chair podcast series, and we're excited to continue the dialogue with association executives about challenges and opportunities that nonprofits are facing today. I'm excited to be joined by three fabulous colleagues today to discuss financial management and some of the financial challenges that our client partners are facing. We've got Mike Pulick, Chief Financial Officer for Association Headquarters, Kristy Cohen, Chief Executive Officer for Restoration Industry Association, and Kristina Orta, Senior Reporting Analyst for Association Headquarters. Welcome, everyone.
Thank you.
Thanks for having us.
Mike, why don't you tell us a little bit about yourself?
Sure. I'm AH's CFO. I oversee all things finance, I guess you could say, right? I've been with AH over 8 years. I started my career in public accounting, got my CPA, focused on lots of different engagements, but primarily focused on not-for-profits, governmental audits, and then I moved on to corporate accounting, where I worked for a national home builder in their audit department and then took a controllership. Finally taking the position here at AH to work with not-for-profits.
Excellent. Well, we're excited to have you here, Mike. Thanks.
Thanks, Manuel.
Kristy, tell us about you.
Yeah, sure. So I have been working in the nonprofit world for about 20 years. Starting out, kind of tripped my way into association management. Started out working with nonprofit 501c3s that were focused on community development and working in various communities with education and children, and have been with Association Headquarters now for a little over 10 years, and was really excited that those nonprofit work that I was doing previously really just carried over seamlessly to working with associations. And so I've been working with trade associations during my time here at AH, including NADCA and now certainly RAA. So excited to be here.
Excellent. Thanks, Kristy. Kristina, tell us about you.
Sure. I've been with AH for 11 years now, and I've been working in accounting for over 25 years. I started out in the corporate world doing for-profit accounting, mostly for an electronics manufacturer down in West Virginia. It was a small company, so I had a lot of opportunity to just do everything that needed done. So it's really helped me understand from the beginning to the end exactly what the accounting process is all about. I'd never had nonprofit experience before coming to AH, and I started out as a senior accountant. So I got to learn all the differences between the for-profit world and the nonprofit world while I was doing it. So I know how to translate accounting speak into plain English. That's kind of my specialty here.
Excellent. Well, we're going to need some of that today. As you can see, we have a very esteemed panel with us today of subject matter experts, which I think on the subject of finance is super important. For many of us, numbers, accounting, financial management is not a core skill set. We're forced to learn a lot of times in the course of managing the businesses that we work with and for. But it's really important, particularly today, I think, coming out of the pandemic. I talk to a lot of association executives in our client portfolio and outside. And just like in our personal lives, the world feels like it's been turned a bit upside down, right? We're still struggling to figure out what the new normal is. And for associations, it's affected every part of their balance sheet, right? And so we thought that financial management and discussing some of the more common financial challenges would be a really relevant topic for our podcast audience. So with that, I'm going to jump in, and Mike, I want to talk to you about one of the most common and most important areas of financial management that associations need to pay attention to, and that's revenue, right? So talk to us a little bit about what you're seeing in terms of a trend. I think the last 3 years is particularly important, but even beyond that, in terms of where associations are getting their revenue from, and what we're seeing in general in terms of the trends.
Yeah, I think, when you look at it from the perspective of pre-pandemic and post-pandemic, there's definitely that change that you talked about. So where we are now is kind of still finding our way, right? We're trying to figure out what does it look like, depending on the organization, depending on how sensitive they are to, or reliant they are on their meetings function perhaps, right? We're just seeing that come back now. But on the other side, revenue is the expense, right? So we see, while the revenues have, started to come back, the expenses and inflation has kind of offset any of that revenue gain if you had it to begin with, right? So we're looking to kind of balance those two out now and understand the macro implications of what has inflation done, right? Because the numbers have been pretty high, right? We went from 0 interest rates and 3% CPI to 8.6, right? And it seems like overnight. So that's been a great challenge on both revenue and trying to charge more. And I think it really comes down to the value proposition, right? Like, a lot of people are looking at it as, why do I need to be a member under these harder economic times, and what's the value prop? That's really important for the organization to be able to deliver that message succinctly on why you need to, or what benefits you would derive from membership, typically in the membership organization. And I think the meeting itself, the annual conference, comes back to hybrid is always going to be a component of that now. That's what's changed for us. So we see that, I think, more commonly, and that pivot from in-person to virtual, right, happened pretty instantaneously for a lot of our clients, and we learned along the way. We were all learning along that way. So I think that one of the challenges is, how do we balance that now going forward in the new setting?
Yeah, no, I think that's a great point. I think that I know a lot of our client partners managed to pivot pretty quickly, right? We put on some really successful events in 2020, and in the association space in general. There are associations that may not be here today because they weren't able to pivot in 2020. You mentioned something that I want to talk a little bit about, which is membership organizations, and then the certification organizations, right? So similar in the sense that they've got what we would consider dues revenue, if you will, right? So whether it's coming from membership or certification. Kristy or Kristina, in your experience, have you seen one fare better than the other, membership versus certification? What has your experience been in that in the last few years?
So I would say, speaking on behalf of one particular client that I've been working on, NADCA, we have seen a substantial growth in our certification versus membership. Now, membership is growing, but not at the same rate as certification. And I think the key, though, with the certification process is you have to have that market demand for certification. To Mike's earlier point, people are being more selective. They're being more selective in terms of who they're going to engage their time with from a volunteer aspect, what organizations I'm going to join, how I'm going to spend my money. And so I think with certification programs, if you are able to identify the market value, how this is going to increase my income as a professional, how it's going to open up my career opportunities, how it's going to help my business make more money, targeting in on that and being very strategic with how you position your certifications, that has seemed to be resulting in an increase, over time that has fortunately trended regardless of the pandemic. Folks were still looking to get certified. We had to pivot to online education or make sure that we're delivering exams via an online mechanism, but that's where we've been seeing, as long as you have that solid value proposition, that certification is a huge opportunity for revenue.
No, that's a great point. And as a marketing guy, when we talk value proposition, it's music to my ears. Because before the pandemic, during the pandemic, and after the pandemic, how we market the value proposition of an association, whether they're member-driven certification or both, right? We work with associations that are fortunate enough to play in both of those spaces. I think the audience, whether they're certificates or members, have certainly become more astute at measuring the return on the investment
Yes.
that they're spending, as they've seen maybe their own personal incomes, contract a bit during the pandemic, or have, experienced some other hardship. So I think that's a great point. I want to circle back to the expense side of the equation, because that, of course, is probably the second most important thing that we are dealing with today. And again, in terms of the new normal, one of the things, I had a conversation with a client partner last week about contracting their leased office space, right? And I know here at association headquarters, we look at that as an opportunity, not only to manage our expenses, but to reinvest some of that money in our employees and in technology and things like that. And while I don't have any data to support it, I'm hearing a lot more of this idea of, managing those expense items and seeing that as an opportunity, to either, weather the storm on the revenue side, which some associations have not recovered yet, or you see it as an opportunity to reinvest in sort of the post-pandemic technology-driven world. What are we seeing across AH's client portfolio or in your own personal experiences?
I would say the investment in technology is really pivotal right now. I think, I know a lot of folks are looking at brick and mortar and saying, okay, we need to rethink. We're rethinking the workforce. We're rethinking how we're engaging with our employees. And so whether it's investment in technology around how am I onboarding my employees, right? How am I integrating my various systems, so that my platforms are speaking to each other. This is all, how do we become more efficient in this new environment that we're working in, right? We have, we're coming out of this whole employee experience where folks were, leaving, we were having a lot of challenges there. And so I think the investment in technology, looking ahead and having the foresight as associations to say, look, Chat GPT is here, AI is coming. Like, what are the things that we're going to have to invest in to deliver the kind of experience that people are going to come to expect? And so I do think technology investment on the expense side is really, really key right now, and that people are rethinking kind of the traditional models of, brick and mortar and what those needs would be. How can we be most efficient and engage in a new environment?
Yeah, no, it's interesting. I'm a bit old school, so I still love coming to the office. I think this kind of interaction, quite frankly, during the pandemic, it's what I miss the most, personally and professionally. So I look forward to it. But when you mentioned sort of the recruitment and retention challenges that a lot of our association partners and companies across the world, quite frankly, were experiencing. As we started to come out of the pandemic, and folks realized that they were able to work and maintain their lifestyle and contribution to their companies sitting at home in front of their computer, they were demanding a lot more. So this investment in technology is not just external and outward facing with our members and our certificates and external stakeholders, but also with our employees and our internal folks. So revenue and expenses, which all kind of leads us to this idea of financial management starts with a sound budget. And Kristina, I know we've talked before, and you are, as you said in your introduction, you're really good at boiling it down to sort of plain speak in English that folks can understand. And I know that you have a lot of experience talking to boards specifically about financial management and good financial principles. So when we talk about the budget process, what would you advise is probably the number one priority, or how would you tell an association executive to approach the budget process, particularly as they're talking and engaging their boards?
So I think that first and foremost, have a process. And that sounds pretty elementary, but especially when you're just busy trying to make sure things are working, processes are kind of secondary.
Yeah.
But the truth is that it's something that you have to do and do well on a regular basis, hopefully on a regular basis, but a lot of times it's like every year, and then it's, well, what did I do last year? Having a process really helps to bridge that gap and help you remember what you forgot over the last year. So first off, have a process. I think that second, you need to make sure that your assumptions in your budget are documented, because you're thinking you're going to have X number of people at your annual meeting that you need to feed. That's going to be a big part of your budget. What happens if X turns into Y and you suddenly have a different head count? How does that affect your budget? How does that affect your hotel block? How does that affect everything else? If you don't have those assumptions documented in your budget, then you don't have a fighting chance of going back to update it. You're going to have to start from square one. So make sure you have your assumptions documented. And just, budgets are assumptions. They're a crystal ball into what you think is going to happen. And when you do your budget at the beginning of your year, you're guessing at everything. Make the effort to update that budget at least once a year. Depending on the size of your organization, perhaps quarterly, perhaps even monthly. Make the effort to update it, because that's the goal you're working towards. That's the thing that's going to help you understand, do I have enough cash in the bank to cover this? Do I have enough, am I expecting to be able to earn enough money this year to be able to invest in new technologies and to be able to do the next great initiative? I know that one of our clients that's a certification group actually took some of their reserves and spent it on virtual reality training for their people. And that's, like, with AI coming, that's a big deal, but that's something that you have to have a clear budget and a clear plan for an investment like that to be able to make it happen. And I think that as technology becomes more and more a part of everybody's life, their expectations are going to be higher, and that value proposition is going to have to include amazing things like virtual reality training. Mm-hmm. And that's going to take careful budgeting, careful planning, multi-year outlook. It's going to take all of that.
So as you're talking, I'm thinking that probably second to process would be trend reports, or an understanding of your budget trends, right? And so a lot of associations, and our partners very much the same, are earning their revenues, or the lion's share of their revenues, from one or two sources in a short period of time, right? So you're not seeing revenue drip throughout the course of the year. Your dues are renewing at a certain period of time. Your annual event registrations are due at a certain time. And so I think it was you, Kristina, conversation we had, talked about this idea of understanding the mountain and the trend, right? So talk to us about that, your experience with associations that do that well, how they're thinking about that.
Sure. So the idea of the mountain is, if you take your operating cash balance and just plot the ending balance every month over the course of a year, what you're going to find is that it looks like a mountain, and you'll have one, maybe two peaks in that mountain and several valleys. Your peaks are going to be when your membership revenue comes in, or when the bulk of your registration revenue comes in. Those valleys are going to be when your big bills are due to be paid. You have to plan for the valleys instead of just enjoying the peaks. During the pandemic, clients that had only one revenue stream were much more likely to have difficulty being able to be solvent moving forward. So multiple revenue streams is a great thing, but then the other thing is that you want to do your cash planning to ensure that when you have that peak and you're like, wow, I've got X amount of money in the bank, I don't really need that, let's invest it in a 12-month CD. Well, that sounds like a great idea at the time, but then your hotel bill comes to you from your annual meeting and you've got a large outlay, and now that cash is tied up in that CD and you can't access it. So you need to make sure that you have a clear picture of what your mountain looks like, and then clear investment policies that say you need to keep X amount of money in your short-term reserves to be able to plan for those dips in your cash balances, and then anything above that can go into your long-term investments.
So having a clear and documented process, understanding your financial trends historically, right? 2 years does not make a trend, right? If you're a new association, that's different. And we've worked with new associations, startups and things like that. And so, but there's also data on similar associations and industries that we could look to inform our process. You just talked about something I think is really important, which is diversifying your revenue streams, right? And not easy for any organization. Nonprofits and associations are no different, but I think we have some success stories, right? We have some client partners that in the time they've been with us that have focused on that, right? Which I would say as a strategy guy, whatever you're going to do, focus on it, pay attention to it, nurture it, right? So developing a revenue diversification strategy is doable. Kristy, do you have experience with associations that have done that well?
I do. So RAA is actually a great example. During COVID, our convention was typically our largest revenue generator. And before coming to RAA was seeing a dip in membership dues, right? Membership generally. And so we were overly reliant on that convention revenue. So when COVID hit and we had to literally cancel our in-person meeting a month before it was about to happen, we pivoted to a virtual convention, and we were able to work a lot with our accounting team to determine, okay, cash flow issues, how are we going to navigate this, how are we going to manage it? But through that process, it was definitely a wake-up call. It was like, okay, how are we going to diversify our revenue so that we're not put in that position? I think that did that for so many organizations now, to say, wow, okay, let's decide what we're going to do so that we're not put in those kind of financial precarious situations in the future. So a couple of things that we did: we've diversified revenue through our sponsorship and digital advertising. Digital advertising has been very successful for us. There's a low expense side to that, but a high return on investment in terms of the sponsorship advertising and their click-throughs and their view rates and things. So we've seen a huge uptick in offering digital advertising as part of our sponsorship packages. We've pushed to really create some more customized sponsorship packages for our exhibitors and our sponsors of our various events, making sure that the packages that we put together give you year-round advertising opportunities. It's not just necessarily focused on your convention. It could be a package of digital ads for an annual period of time, promotion and sponsorship of other educational events that we have throughout the year. So meeting the sponsors and exhibitors where they are to help them spend more money with your association has been a great way for us to diversify our revenue. The other piece that we did is we focused on membership. So we said, okay, we cannot be overly reliant on the convention. We're seeing a membership decline. We were charging the same dues amount for all of our members, whether you were a $10 million company or a $500,000 company. And we said, okay, let's use cash financial modeling to look at different scenarios and say, okay, if we were to change the dues amounts based on the size of your company, what would that look like? And we took a conservative approach. We looked at our current member-based portfolio and we said, okay, if we were to make the dues amounts various levels where you selected the appropriate level for your company, let's model that out to our best estimate of worst, medium, and best case scenarios. And that's what allowed us to say, yes, we're going to do this. We're going to revamp our dues structure so that now it's not a one-size-fits-all approach. It's totally customizable for the members. They can do monthly subscriptions where it's just auto-renew on their credit card, annual subscriptions, meeting members where they are to make it easier and more affordable for the smaller folks, and to allow the larger companies to invest more in their dues to help our programs and services grow.
Excellent, like you
And if I might, I think, Kristy, all of those things that Kristy just eloquated tie back to that budget discussion, right? And one of the things that we didn't talk about was the alignment of the strategic with the budget, right? Like those were all tactical things that she did, but there was an underlying strategy that needed to be aligned with that budget. So all of those what-if scenarios were well thought out and a bigger strategy to drive revenue diversification, right? Which probably is the underlying theme of that strategy there. So not to forget about that, I just wanted to highlight.
No, I think that's a great point, and I think that's not just for financial management. We see that on the marketing side of the business and on the technology side of the business, where you have functional experts developing tactical plans to support the organization separate from the overall strategic planning, right? So there's a general lack of alignment, which certainly should start in the area of finance, right? Kristy, you mentioned something that I wanted to touch on real quick, because I've had conversations with multiple client partners just in the last couple months about this idea of, our members, our stakeholders have come through the pandemic as well, right? And many are suffering their own financial hardships. And this idea, which was news to me, which is why I think it's worth noting, that most associations were sending a once-a-year bill for dues or certification expenses, whatever it might be. And one of the most successful things that these client partners have experienced in the last 3 to 6 months is by offering quarterly and monthly payment options in recognition of their members' own sort of personal financial situation. And that action in and of itself, which isn't necessarily a small lift, right? If you don't have a process in place internally for more frequent invoicing and accounts receivable, then there's some work to do there. But I would suggest probably an easy investment to justify if you can retain an extra 10 or 20% of your membership, because you've now given them a more reasonable payment terms.
Yes, 100%. I think, in 2 ways. So as part of our dues restructure, we also were receiving feedback from the industry to say, RA, you need to do more to put yourselves out there. There's a whole group of restoration contractors that don't know you exist. Let's get them to experience the RA and what it has to offer. And so we also established a first time. So in your first year of membership, if you've never been a member of the RAA, you're able to have a first year of membership of just $299 or $25 a month, okay? It's a model that people are used to. I'm used to my Netflix subscription. I'm used to, right? And if I'm getting content that is meaningful to me and I'm getting a good experience, then it makes it a no-brainer. So let's take away that option for people to miss an invoice, to have to keep track of renewal dues. They are busy running their companies, working on their professional development. Let's try to eliminate those barriers and make it very easy for folks and affordable for them to see the value of your association, so that they're going to say, yes, I get it now. You made it affordable for me to join, and I like what I'm receiving from the organization.
Yeah, no, I think that's a great point. It's always sort of about, and this is again as a marketing guy, whatever your audience is, we always talk to our client partners about meeting your audience where they are, right? And approach the way you engage your membership from a more outward in approach, instead of sort of what's good for us or what are we used to and most comfortable with. A follow-up question to that, I think, for Mike or Kristina would be, I'm guessing there are folks that are going to listen to this and of course love the idea, because why wouldn't you, right, if you're going to have an opportunity to retain more membership, but there's got to be an increase in cost to some degree if you're processing just more payments, right? More frequent payments means your accounting expenses in general go up. If you're mailing paper invoices, which I think some people probably still do that today. So have you been doing this long enough, Kristy, or for Mike and Kristina, have you seen other client partners do this, where we can give folks some assurance that it's worth it, right? The offsets, yes, there's a little bit of an expense increase, but the offset has proven to be worth it.
Well, I would turn it over to Kristy and Mike in terms of the accounting piece of that, because that is a real thing to consider.
Yeah.
I think the guarantee is that you have to be delivering a good product. If you are not delivering that value proposition to the members, if I don't, really need you and you're not really benefiting my business or helping me make more money or whatever it is that you're doing for me, then look, people can just cancel that monthly subscription, right? What the data that we're seeing is that the monthly kind of set it and forget it mentality around the dues payment has been working for us. You're going to always have that chance and that risk, especially from a cash flow perspective, that someone could be with you for a month and say, hey, I'm going to cancel my subscription, and that risk is real. And so you really have to go into it eyes wide open from the standpoint of what is the product and how is the experience going to be for the member in order to make that work.
From the accounting side of things, this is where technology comes in again, right? If you have the right membership information system, then it can securely store the member's credit card data without you ever having access to it. It can automatically run their credit card, so you don't have to send out paper invoices every month, because that would, as an accountant that's done that, that's not a lot of fun. That would definitely give you pushback from your accounting department. There would be cost involved in that, but your membership information system may be able to do that for you. Now, certainly there's more to worry about on the reconciliation end, and if this is a change you're looking at, you should definitely include your accounting team, because with annual dues renewals, there is a revenue recognition component to that. And if you're going to monthly payments instead of annual payments, you're going to have to pay attention to exactly how that's going to impact your accounting department. So certainly get your accountant involved in those discussions.